Hello and welcome to our webinar. I'd like to welcome our listeners around Australia. My name is Joe Tadaro, Advisor Education Analyst at North, and today we'll be discussing account transfers on North Online. So if you've joined us before, then you'll know that you can ask questions at any time during the session today on the right-hand side menu within the chat icon. So just select that chat icon and ask a question at any time, and we'll endeavour to get back to you upon the conclusion of the session today. If for any reason you've got some issues with your audio and it drops out, please close down your browser and reopen the session, and that should fix up the problems. And if you're still having technical difficulties, this session, as always, will be recorded and it's going to be uploaded to North Online, which I'll show you in a couple of moments' time. So I'll just grab North Online and show you where we will upload it, just in case, so you can show a colleague. Just bringing up North Online there. We head on to North Online under the support tab there, just across the top and down to training videos. Training videos is where you'll find snippets of information, but also if you scroll down, we've got webinar recordings. So all of our webinars are recorded and uploaded to North Online for you to view at any time. I'd also like to take this opportunity to ask that for any upcoming key information, you visit North Online under support across the top, down to news and announcements, because news and announcements are going to have the latest up-to-date information about everything new that's coming to our platform, including key information at various critical times for you. So that is something not to be missed. So you can either view that via support across the top, or if you head to our home screen, you'll also find news and announcements on our home screen as well. So let's kick off our session today because we do have a lot to cover. So please note that whether you're a beginner and never used North Online before, or you could be a seasoned veteran out there, the session today will have something for everybody. So we're going to discuss the fundamentals of account transferring, and then also include some intricate details with hints and tips along the way. So I'll highlight what to look for and call out some pain points for account transferring. So today we're going to be talking about support material that is available to you, the methods of account transferring, because there are various methods of moving money about on the North platform, different ones that you can use in various circumstances, and they are used depending on the circumstance. So we'll be talking about creating a new pension account with multiple rollovers, creating a new account prior to account transferring within an existing account, cross-client account transfers, and then further to that, what you need to know, pension recasting, so we're talking refreshing pensions, and then we'll end today with account transfers and family fee aggregation, how you can use that to your benefit within your practice. So let's kick off the session today, talking about that support tab again on North Online. We spoke about training videos, but we've also got training resources there too. So we're talking step-by-step guides on North Online, especially how to complete an account transfer as well. Some great information there too. Also, under the products heading across the top and down to forms, there is an account transfer form where there is a short video as well as the transfer form, which we'll be talking about a little bit later on today when we discuss cross-client account transfers. So let's kick it off with the methods of account transferring, as there are quite a few. We'll start with creating a new pension account with multiple expected rollovers. So if you create a new pension business application on that very first page, it'll ask you how many rollovers would you like to come into that account. So what that's doing behind the scenes is creating a temporary super account, and it's going to wait for all of those rollovers, depending on wherever they come from, to be received within that super account. Once they are received, then it will immediately be used to commence the pension, including any investment earnings received in that interim. And if we don't receive specified rollovers within 75 days of the submission of the application, then the pension will automatically start with the total receipt of rollovers at that time. So that is creating a new pension with multiple rollovers. The second of those is creating new accounts within the client's existing profile. So we're talking in depth about that, and that is utilizing the account transfer function on North Online. Then we'll talk a little bit about cross-client account transfers. So that is the transfer between two separate clients that are not on the one client number. Well, there might be two different people, so different account structures. So for example, moving from super to investment account, super to to pension, of course, but not on the one client number. We'll talk about that in depth. And then we'll also talk about recasting. So we're talking recasting pension accounts or refreshing pension accounts. So for the purpose of topping up a pension account with more money in it, we'll talk about that as well in our session today. So our first topic we're going to talk about is creating that pension account with multiple rollovers. So when we're talking about that, we're talking about automation. So taking out the human error element. So on the very first screen, when you're creating that new application, it'll ask you for the type of pension account, but then further to that, we've got the number of expected rollovers. So if you have more than one rollover coming into that pension account, it's going to automatically create a new temporary super account. Then it's going to wait for all of those rollovers to come through, be it from BT or Host Plus or Australian Super, wherever they're coming from. It'll wait for all of those rollovers to come into that account and then automatically commence that pension account once they're already received. So I already mentioned about taking the human element out of it because human element unfortunately can lead to errors. So it means you don't have to keep going into the account to keep checking that the rollovers have been received. It'll automatically do it for you. So really great functionality on North Online. But please note, if you don't receive those within 75 days, then it will automatically move across to commence that new pension account. So please note, something to really note in this process is that the investment instructions that you do create within that new pension application will be mimicked in the temporary super account. So for example, if you have investors per buy profile listed, as soon as that money hits that temporary super account, it will then start buying as per the buy profile if you have investors per buy profile selected. Then if number 2 rollover comes into the account, it's going to do exactly the same thing, and so on and so forth. Please note that you are unable to make contributions into that temporary super account, unable to do that. If you are wanting to contribute into super, you'd need to create a brand new super account that is separate to this pension account. You can create both of those applications in the one activity. It will create 2 accounts, of course. And how do you do that? When you get to the end of your first application, say you're starting the pension application first, and you get to the very end, you're then able to create another new account within that activity, if desired. Please note, if you get to that stage and you only want to submit one of those accounts, if you've created 2 accounts in the one activity, you're unable to do separate submissions. You'd have to remove the account in which you're not wanting to submit. Also further to that, if you're submitting rollovers to come from another fund into North, please note if it is an electronic rollover, you hit the submit button, then it will automatically request that monies to come across into the North platform. So it is automatic. So if you don't want that to happen, so for example, you're waiting on insurance to confirm or don't want that to happen at that time of submission, you need to remove that rollover from the application and then submit that rollover when desired. So now let's talk about creating a new account prior to the transfer. So within the client's profile on North Online, within their own client number, where you see on your screen, you've got view all accounts. You have the ability to select open new account from there. And the great thing is that by selecting create or open new account from that screen, is that when you've got an existing client profile, it means that when the client logs in on North Online for their own login, they'll see all of their accounts under the one login. So that's a really great feature. But also funds can be account transferred on North Online between the accounts. So if you create the account outside of the client profile, you're unable to facilitate an account transfer on North Online. Also, this is really important, is that for all accounts that are listed under one client profile, there is ease of reporting. So you can run a client report and capture all of the accounts under that particular client. But also, if you're in the one product, then creating the new accounts within the existing profile will aggregate the balances of the accounts for administration fees. So we automatically combine the account balances of up to 6 accounts to determine the administration fee rate. So aggregation is product specific. So the account types that we combine include MyNorth Super, MyNorth Pension, MyNorth Investment, North Super, North Pension, North Investment. So we'd ask that you check the PDS for further details for that, of course. So where can you account transfer? If you're under the one client profile, if all the accounts are there, you can account transfer super to pension, pension to super. You can also go across to investment as well, if desired. So it is definitely a need if you're creating an account for the same client to create it within their existing profile. So further to that, we've got account transferring within an existing account. So if you go within the source account in which your account transferring from, if you go into that account, you can actually create a new business application within that account. So you go into an account, say for example, a super account, we select account transfer from the menu under transfer. Once we do that, a little pop-up will come up and it will then ask you, where would you like to transfer the money? You can either, so first of all, we're fully account transferring or partially account transferring, but then it will then ask you, would you like to create a new account from there? If you create a new account, then of course you're creating the new business application along with the account transfer in the one activity, or alternatively, you can account transfer to an existing account, of course. You're unable to account transfer into an existing pension account if that pension has commenced. So there we go, creating a new account. So when you get to the pre-submit documentation screen, of course, it means that within the one activity, you've got not only the account transfer form, but you've also got the application form in the one activity. So it's a really great feature. So now let's talk a little bit about cross-client account transferring. So what is it? It's the transfer of investments between two accounts held by different members and clients. It is typically treated as a change in beneficial ownership, typically, and the realization of capital gains. So a transfer to a personal super account from IDPS, though, that is processed as a contribution with a default type of non-concessional that is subject to capping and work test rules, of course. So how do you facilitate a cross-client account transfer? Under the product heading across the top, head down to forms and you'll find the account transfer form that is there. How do you get that to us? You can either upload it via North Online, or alternatively, you can forward it to the North Service Centre and they will facilitate that request on your behalf. So you can email it to north@amp.com.au. You can even post it to us, of course, in our GPO box as well. But I'd like to stress, you can upload it to North Online too. So please note, when account transferring, which we'll talk about a little bit later on, it is picking the assets up from where they are in the source account and putting them back down into the target account. And that's really important. And that is without the sell down of those investments. But typically you will avoid buy and sell costs. You won't have to sell them down to cash and move them across the new account. It is picking them up and putting them back down into the new account. So there are some things that you need to know along with that. So what do you need to know? There are product minimums and restrictions that may apply. So you should check the fee structure prior to the submission. Any outstanding fees, tax liabilities, and other incurred costs at the time may be deducted from the cash account prior to the transfer. Account transfers are done on a proportionate basis unless you select specific units. And we'll talk about that when we're talking partial account transfers a little bit later on. So this is really important. The investment instructions, when you're going from a source account to a target account, or the account you're moving from to the account moving to, are not transferred. They don't come across. So the investment instructions on the destination account or the account you're moving to, they will apply. And we get a lot of calls in the North Service Centre saying that, why does the account not look like my automatic buy profile on the brand new account? And the reason for it is, remember, it's an automatic buy, sell, and rebalance profile looking at new money in the cash account when we go above the minimum and the target. So where the investment profile on the destination account differs to the investment profile on the source account, you may want to, if desired, facilitate a one-off portfolio rebalance. If you want it to look like that buy profile on the account you've moved to, you may want to facilitate a one-off portfolio rebalance. So further to that, when we're talking super transfers in particular, all transfers from super must of course meet a condition of release, so refer to our PDS for that, and or be eligible to transfer preserved funds. If transferring to an NCAP or allocated pension account, you must meet a condition of release. Refer to the PDS for that, of course. So transfers from super to the investment accounts can't be processed as rollovers, and they would need to be processed as withdrawals. Really important note there is that existing death benefit nominations, they are not transferred from one account to another. They are unique to each individual account. And then finally, if you would like a fee to be charged on the super account, you need to ensure that that is paid from the account prior to the account transfer. And that's really specific. So if you're adding a fee onto that super account and you're facilitating a withdrawal on that very, an account transfer on that very same day, in an order of batch runs that happen behind the scenes on North Online, the account transfer function will happen first, and then the fee run is always after that batch. The problem with that is if you want that fee to be deducted from the account and you're completely moving out of the account as a full account transfer, then ensure that it has come out of the account before you proceed with the transfer. And that's really important. So another hot topic that comes up all the time, it's usually around the July period, but it does happen throughout the year too, is the account balances during distribution periods. So please be aware that in early July, it is common for some accounts to display negative earnings, and that reduces the balance of the account. This is caused by unit prices decreasing when a distribution has been declared by the fund manager, as the net assets of the portfolio are reduced by the distribution amount. So once that distribution has been paid, the negative earnings will be offset by the distribution. And while we don't have specific timeframes for that process, it does depend on when it is done by the fund manager. And it's typically around about the time of July, but can of course happen throughout the year. So we wanted to make that clear. When you're about to process an account transfer, have a look at that period in terms of distributions and dividend time. So now let's talk about things that you need to know prior to account transferring, and that includes lodging a notice of intent to claim a tax deduction for personal contributions. Now, the beauty of conducting transfers via North Online is that it will automatically tell you if the client has received eligible contributions within their account during the current and previous financial years. You've received this pop-up that you can see on your screen, just confirming, would you like to intend to claim or vary personal contributions as a tax deduction? So if you select yes, then the notice of intent to claim deduction must be issued and completed prior to the withdrawal or the account transfer or recast. So if you select yes, you'll receive this pop-up. It'll ask you to go and claim the deduction and then proceed with your application to account transfer. So once the account transfer or recast has been completed, the notice of intent to claim a tax deduction, it can no longer be claimed. So really important information on lodging a notice of intent to claim a tax deduction for personal contributions. This is also valid when you're withdrawing from an account, exactly the same scenario. And the reason for it is the eligible contributions that are made into an account to claim a tax deduction are reduced when money leaves the account, so account transferring or withdrawing. And once the money does leave the account, it means a part of that monies that were eligible to claim a deduction are no longer there, decreasing that amount to claim. So further to that, what do you need to know? Now we're talking investments or assets that are pending confirmation, pending a buy or sell with a fund manager. So investments that are awaiting confirmation of a pending buy or sell, the account transfer or recast will also wait for this confirmation prior to transferring. So if a full sale of the asset is required prior to the transfer, the initial confirmation of the buy or sell is required before it can actually proceed. So if you go on to North Online then it is really important to know that it will still delay the ultimate account transfer in that regard. Please note, with managed funds, there is a standard waiting time or confirmation time with the fund manager of approximately 3 to 10 days, anywhere within that period, and they are standard. Unfortunately, as you guys probably know out there, there are a number of other funds that have certain redemption dates, the 15th of the month or the end of the month. So please note that they do still apply. So for further information, visit North Online Support tab across the top and head all the way down to the bottom to training resources, and you'll find a document there for longer redeeming funds. So please check out that information. So further to that, what else do you need to know when you're account transferring is things that also can delay an account transfer is when you're partially account transferring with an account which will transfer equities, as the holding identification number or HIN will need to be activated on the target account. So if you're partially transferring with an account that has equities and it's going across to a new account, then the HIN would need to be activated on that target account. So this transfer between the two holding accounts, so HIN to HIN, is called a HIN to HIN transfer. And that will typically take a transfer of 3 to 5 days for that to complete. So if you're fully account transferring from an account that holds equities into a new account, an account that doesn't currently have equities in it, then it's actually moving the HIN across to that new account. So it's moving the HIN across to that new target account. However, if it's a HIN to HIN transfer, it will take 3 to 5 days for that to complete. And that is really important, especially if you're moving money, say super to pension, and you might have a pension payment coming up in that brand new pension account. Please note, if it misses that pension payment date, the system's not going to do a catch-up payment for that missed payment for a pension payment. Once the money comes into the account, it's going to automatically look to the next payment date. So if it has missed a pension payment, then you would need to go into pension details, and then you'd need to select the next business day or a date coming up. And then once it has been paid, move the date again to the desired date in which you wish to have that pension payment done. While we're on the topic of pension payments, if you're fully account transferring from a pension account and closing that pension account, please note that it will assess the pension to see whether they have received the minimum pension payment for the year according to government legislation. Really important, as a separate payment before the account transfer goes through. Really important to note in the current climate, please note that the minimum that it will deduct on a pro rata basis for the financial year, it will be the new minimum that will apply for that account. Also, we need to talk about account transferring with insurance. So if you fully account transfer from an account which holds insurance, then if it is Elevate Insurance or group insurance, it will actually ask you the question. It's going to ask you, would you like to either terminate the existing insurance policy, so do you want to cancel it, or do you want to transfer that policy to the new account? So where do you want the premiums to be deducted from? So you have that option. However, if you're partially account transferring with an account that holds insurance, it won't ask you that question. And also, if the insurance providers are AIA Australia and TEL Insurance, it'll actually ask you to contact the insurance provider. And that is if you want the premiums to be deducted from that brand new account. So please also note, when we're talking partially account transferring with insurance, that to ensure there are sufficient funds left in that source account to fund the insurance premiums. And that's really important, of course. So now we're talking accounts with a guarantee. So there's not that common, but there are a lot of accounts there with guarantees, and you can be account transferring with those accounts. So there's a few things you need to be aware of. That if you're account transferring into an account that has a guarantee, only investments that are available in the guarantee investment menu for that strategy can be transferred to the guarantee account. So that's really important. First thing to note. Also, if you're moving from an account that has a guarantee and you want to move the guarantee to the new account, then you are only able to facilitate a full account transfer to an account with a zero balance. And that will then move the guarantee across the new account. Please also note, with guarantees, you're unable to move a guarantee from North to MyNorth If you're wishing to move across from North to MyNorth and have a guarantee, please note that the guarantee that existing on the North account would need to be removed. You can then account transfer to that new target MyNorth account and add a brand new guarantee, a MyNorth guarantee onto that MyNorth account, of course. It is also really important to note when you're account transferring, if you're account transferring from an account that has a guarantee, partially account transferring, then have a look at your withdrawal threshold. So that withdrawal threshold is that amount that you have every single year, but if you go over the withdrawal threshold, so if you go over that amount, it's going to affect your protected and available balance. So please refer to the PDS for that information. Also, when you're partially account transferring into or account transferring into an account that has a guarantee, you've got that contribution threshold for the year. And if you exhaust that contribution threshold for the year and go over that contribution threshold, there is an additional guarantee fee which will apply. So please refer to the PDSs for that information. So now we've talked about what you need to know. Now let's get back into talking about account transferring, so facilitating account transfers. So you've got the choice to either partially account transfer the investments as proportionate basis, of course, as we mentioned earlier, or you can actually select those investments to be transferred. But if you do select those investments to transfer, then if the transfer value exceeds 90% of the total value of that investment, then you need to select transfer all option. So if it's 90% and above, it's actually got to all go across. Also, there is the maximum transferable value, and that includes the product minimum and outstanding fees and taxes that are liable, other liabilities that are incurred costs at that time. That will be deducted from the account prior to the account transfer. So any eligible dividends and distributions, they will be paid into the account in which they were eligible. We'll talk about that in a couple of moments' time. So the estimated value of investments to be transferred can exceed the maximum transfer value, of course, less than the minimum transfer value. And you can include, though, you can include term deposits in your transfer if you wish to do that. But of course, you can't partially transfer a term deposit. You must transfer all, must select that transfer all checkbox, of course. So of course, remember, you can transfer across pro rata or proportionate, or alternatively select the investments to transfer. So with partial account transfers, we already spoke about that maximum transferable value, of course. So removing any liabilities, including fees and taxes before the transfer. But now we're talking the estimated value of investments to be transferred can't exceed the maximum transfer value. Include term deposits, of course, we spoke about that. But now, finally, that last point, any eligible dividends and distributions will be paid into the account in which they were eligible. So what happens if you've account transferred and that account had been owed dividends or distributions? Well, it will actually equate into reopening that account. So the status of that account will be as a reopened status, and that dividend distribution will come into that particular account. And that is really, really important. So please check if they are due for a dividend distribution. If desired, wait until that comes into the account and then account transfer. So we've spoken about partial account transfers. Now let's move on to recasting pension accounts. So when we're talking recasting pension, we're talking refreshing that pension account, because you can't add any money into an existing pension account that has commenced, aside from when you have a reopen account and the monies had gone as per the previous request from Super to Pension. You can request with the North Service Centre to allocate that money that is a reopened super to come into only an allocated pension account. It must only be allocated pension. We can add those monies into that commenced pension account. If desired, please contact the North Service Centre if you wish to facilitate that. And outside of that, you can't do that. So what do you need to do? You need to recast that pension account. So on North Online, select Transfer and down to either NCAP or Allocated Pension Recasting. So you've got that option to refresh it via North Online. But to do that, you need to have an active super account that is available within the client profile. And we'll talk about later on, if they don't have an active super account, what you need to do in that regard. So on the screen on North Online, you've got the opportunity there to select either full leave minimum balance or a partial nominated amount. So what you can do then is then select the desired super account from which you wish to add monies from. So select that super account. So please note that the existing pension account investment instructions and pension details, they actually transfer across into the new recasted pension account. So the beauty of doing this by the recast function is it's only a couple of clicks. So you're moving monies basically from pension as a full transfer. Behind the scenes, it puts it into a temporary super account. So then it's asking you how much money from an existing super account do you wish to transfer across. It'll move that across into temporary super. Once those two monies have been combined, it will then automatically move those monies to commence the brand new pension account. So that is the only circumstance where we'll actually mimic that pension account, the investment instructions on it, and the pension details too. So the only thing it doesn't do, as previously mentioned, was the death nomination on the existing pension or super account. It doesn't transfer across into the new destination account. So of course, as it is account specific, you have to do a brand new nomination for that account. So users, you cannot select investments to transfer from the existing super account. So the funds actually transfer proportionally. Investments that are waiting fund manager confirmation of a buy or sell, remember we spoke about that, that'll delay the ultimate account transfer. It also delays a recast activity. Another thing that also delays it with a hint-to-hint transfer, as we mentioned earlier, that is going to delay the transfers as well. So please note if the pension payment date is set in the past and the final transfer across to commence that new pension account happens after that date, there's no catch-up pension payment. So the next pension payment date will actually apply. So remember, if you want that to happen, a catch-up payment, go into the pension payment details, change the date as desired to the next business day. Once it has been paid, go back in there and reset the pension payment date. So a pro rata minimum pension payment must be made from the original or the source pension account prior to that transfer. And as we mentioned that earlier, it applies in a recasting facility as well. And the new government legislative minimums will apply. And also any eligible distributions and dividends will be paid into the account in which they were eligible. So if it's closed, it will reopen that account, so equating into reopen accounts. So further to recasting, if there's no active super account, you want to recast money, or if you're wanting to recontribute into super, so putting new money into super or making a contribution, then you just have to create a brand new super account. Create that super account and contribute to that super account. Once the monies are there, you then do have the ability to utilize the recast function if desired. But if you didn't want to do that, what else can you do? You can do point-to-point account transfers. So remember, just taking the money from pension, so moving from pension as an account transfer to the super account. Once the money's in the super account, then you would then do another account transfer into a brand new super account, a brand new pension account. So it is really important to know that when conducting point-to-point account transfers, for example, in this scenario of a recasting of a pension, that in this scenario, the investment instructions don't follow. So finally, we're going to discuss family fee aggregation. What is it? So you can combine the balances within a family group for a product, of course, to aggregate them for the purposes of the administration fee rate. The only deal is how are they deducted from the account? So when they're deducted from the account, they're deducted on the anniversary date of the account. So let's have a look at the example on the top part of your screen just here. So we've got a couple of different accounts. We've got the 10th of the month, the 15th, and the 20th of the month. And they're all the commencement dates for an account. So which account will have the fee deducted first? The first account will be the 10th of the month, then the 15th, and then the 20th of the month. So just have a look down further on the bottom of your screen on this example. We've got member 1, 2, and 3. It's important to note those commencement dates of those accounts. And that doesn't look at the month of the account, is just the day within the day of the month within the commencement date of that account. So the first account to charge the fee will be member number 1, then member number 2, and then member number 3. But if you wanted member number 3 to go first, what do you need to do? You need to account transfer from member number 3 to a brand new account before the commencement of that first account. So transfer before this day, making member 3 member number 1, and so on and so forth. So you can actively change the date in which fees are deducted from the accounts via account transferring. So if you want more information around that, please visit North Online, the support tab across the top, of course, down to training resources. And we do have a document there, how to create and modify family fee groups on North Online. Really great information. And really further to that, of course, if there's any more information you do want to seek out there, please email us at north_advisor_education@amp.com.au. We'll be able to arrange and facilitate an individual training session if desired. Alternatively, visit North Online support tab across the top, down to training resources and training videos. This webinar is recorded and will be uploaded as a video under training videos, so you can refer to this at any time, of course. We'd also like to take this opportunity too, if you visit North Online to support tab again, to news and announcements, or the latest news and announcements, and for key information will be there, so please access that, of course. I'd like to thank you very much for joining our webinar today for account transferring on North Online. We hope that you do join us again very soon for another upcoming webinar. I'll keep this webinar open. I'd like to thank you for the questions you have that we have received so far, and we'll endeavour to get back to you upon the conclusion of today's session. So we'll keep this open for a couple of moments more for you to be able to ask any questions you like, and we'll get back to you as soon as possible. So again, thanks so much for joining. My name is Joe Tadaro, Advisor Education at Last. We'd like to see you again in a new session very soon. Thanks again.